Welcome, ladies and gentlemen, to Commodity TV and a new episode of our online interview series. We want to get an update of famous Canada nickel company, and Mark Selby, the CEO, is here with us. Hey, good morning to Canada. How are you, Mike?
Hey, great to see you again.
Yeah, great to see you. It has been quite a while, but I must say you guys are really executing. Let's have a short look on the first half of this year. What would you highlight especially?
Yeah, so first off, it was the strategic investment by AngloAmerican, who became a 9.9% shareholder. That's the first investment by a large mining company in one of this next generation of large-scale ultramafic nickel deposits. So that's and AngloAmerican has not done a lot of early stage investments. So that was a big endorsement for us. Off the back of that, we were able to raise another good chunk of capital there. So that keeps us in good stead through year end. We successfully completed the first stage of permitting. So there's 3 stages in the Canadian federal permitting process. So, we're already through 1/3 officially. We're on the second stage right now. We've been planning for that for a few years. So we're on track to have that first half next year, which would leave us in position to get permits by mid-2025. And we're working towards being ready to construct at that point. Other big milestone, we appointed Cutfield Freeman as project debt advisors. There's only a handful of top tier companies, and Cutfield is one of them. So they joined Scotiabank and Deutsche Bank, who came on board at the end of last year to put the whole financing package together for the project. So again, good endorsement to have companies of that quality involved with the company at our stage of the project. And then in terms of the asset itself, Crawford will have feasibility study out in September. We had a huge pile of success through the year in terms of additional support for our IPT carbonation, which allows us to store a megaton of CO2 per annum, which obviously is a big deal in today's world. And so very glad to be able to produce nickel and cobalt and also store carbon as we mine it. And then we picked up a bunch of properties around Timmins. And we really think we're unlocking something that has the potential to be as big or bigger than Sudbury in terms of overall resource potential. And we've had a series of results of initial stage testing of a bunch of these other targets. That's hitting the right kind of mineralization with the right kind of grades. And then finally, we acquired this Texmont property where we've come up with some great higher grade drilling. This is a potential to be in production by 2025. We're going to complete a resource and PEA this year, and this will be basically a small scale, starter open pit operation with toll milling, and we'd look to produce 3,000 to 5,000 tons of nickel per annum, assuming everything works out. So, there's been a busy first half, lots more to come in the second half, and again, nickel prices are hanging in north of $20,000 a ton.
Which is, I would say, quite nice still, but they will move much, much higher.
Yes. Yeah. No, I think so as well.
Yeah, absolutely. Let's stay shortly with the Texmont project. As you said, this will be the project which shall be, very fast, let's call it quite fast in production. And I think you had some very good news on the initial metallurgy work. Here with nickel recoveries of 79 to 84%. Also the cobalt recoveries are really interesting. We were always talking about nickel, but now cobalt comes also into the play. So how would that yield in? And when we see the final concentrate of about 18 to 28% nickel and 0.7% cobalt, how would that pay out finally, given, let's say, a nickel price of $25,000 a ton and the respective cobalt price?
Yeah, so the big plus there is the cobalt in the nickel minerals themselves. So wherever the nickel goes, the cobalt goes with it. So again, we were very happy with those kind of recoveries. This mine operated briefly in the 1970s and was able to achieve those kinds of grades, but off of sort of 1.5% to 2%. What we were excited about is, at 1% and even 0.6%, we were getting that mid 70s to mid 80s type recovery with all that cobalt associated with it. So again, our view is we will toll mill that. And with those kinds of nickel and cobalt grades, we can sell that to a smelter and get paid for both the nickel and the cobalt. So, that cobalt is a nice added bonus in terms of the overall economics.
That's great. So where do you think you can toll mill that?
So the Kidd Creek Mill has one circuit that used to process nickel ore back in the mid 2000s. So we're in discussions with Glencore about utilizing that circuit. There's another mill about 15 kilometers away that in the past has also processed nickel ore. And then we're in between Timmins and Sudbury, and so if we can sort the ore to make sure we get the grade up high enough, then it's potentially we could ship it to either of the mills in Sudbury with the Glencore Valley mills there, both of which are short of feed. So it's again the great place about where we are is you've got all this infrastructure in place. It's a very supportive mining community, so you can get stuff done quickly. You've got the contractors and the resources available. And again, you've got those physical assets, in relatively close proximity.
How much money would be required to get this thing into production? Just a guess. I know
Yeah.
it's a forward-looking statement,
Yes.
but do we talk about 100 million, a 50 million, or 20 million, or what? Do
Oh
you
yeah,
think?
no. I mean, again, as a basically a contractor open pit operation with toll milling, you'd be looking in the tens of millions of dollars, to be able to get there. And again, given my past experience with other companies, we've got great relationships, with a bunch of people who are keen to fund these type of operations. So, just because it may cost 10 or 20 million dollars, it may not be that much equity that we'll be able to do, a decent portion of it as debt, specifically, for that asset. So, Texmont gives us a lot of flexibility. It still has mining leases in place, which, simplifies the permitting process. It allows us to be in production by, 2025 if everything works out the way we're expecting, so which is a couple years ahead of when Crawford will come in at the end of 2027.
And what do you think? How much money can you make per annum? Would it just be enough to self-fund your exploration on the other projects, or what we are talking
Yeah,
about?
so it should.
Because you said something like 3 to 5 thousand tons,
Targeting
right?
3 to 5 thousand tons of nickel per annum, which would be kind of 1,000 to 2,000 tons of ore a day, at a grade. And so, it'll be, we'll look to generate some free cash, which, basically, help fund Crawford, help keep the lights on. We'll spend some of it on regional exploration. Again, until we get full value for the first 2 billion tons of Crawford, we're not going to spend a lot of money on the regional exploration, but we're going to continue to demonstrate the exploration potential that's there. And, again, at Reed, Midlothian, Sothman, Bannockburn, we've been able to successfully demonstrate, the potential of that regional package that we put together.
As you are just talking about all those other projects, what would be the next steps for those other projects? Because I have the feeling in each of the projects we have the next Crawford.
Oh, for sure. No, and I think, pretty much everybody on our team's convinced that, there's going to be one or more deposits in there that are better than Crawford, frankly. And so, the initial stage is basically we do very wide space drilling just to confirm that it's got the right kind of mineralogy and to see what the various nickel, sulfur, cobalt, iron, and chrome grades look like, PGM grades. And then, once we've got most of them tested, we'll start to look at advancing, the best ones towards an initial resource. But again, we're going to do it in a way that, that makes sure that we don't dilute our current shareholders' exposure to Crawford. But, in behind Texmont, Bannockburn had some drilling done by a prior operator. So Bannockburn and Deloro, have enough drilling to support a resource in the future. We'd likely then, work on those next. We're very excited by the scale and the kind of grades we saw at Reed. At Midlothian, very early results, but again, some pretty exciting grades there. More aurorite mineralization, similar to what you see at FPX. And so, again, just very, very excited by that entire regional potential, and unlocking, again, large quantities, and potentially large scale operations, all of it, zero carbon because the host rock and tailings all absorb carbon. So, each one of these deposits has the potential, to be able to soak up additional carbon, as we operate, which in today's world, is a perfect combination of supplying critical minerals, and helping decarbonize the planet at the same time.
Yeah, so the question to me is like, I'm a shareholder in your company, but also a shareholder in Glencore, and you mentioned Glencore already as a possible toll milling company for you. But Glencore is on a worldwide shopping tour these days, which is unbelievable, and I like what they are doing. Have they knocked on your door already? Because it would make absolutely sense for me.
Well, I know the Glencore nickel team very, very well. I worked at Inco 15 plus years ago, and obviously with past life with Dumont. Glencore in 2012, they made a very conscious decision to not do too many greenfield projects. So they've been on a shopping spree with Teck and some others for some producing assets, but they were very reticent to do greenfield projects. That's now changing. They've made some very small early stage investments. But again, as we go through the cycle, they see the same thing as everyone else, that there's very few nickel sulfide discoveries. There's very few nickel sulfide discoveries in places like Canada around a bunch of infrastructure where you can actually build a project. So, I think if their companies aren't shopping now, the urge to shop and get, exposure to nickel assets. We've seen BHP and Wyloo acquire a bunch of assets. Wyloo acquiring Mincor is paying almost the equivalent of US dollar per pound of measured and indicated nickel resource. We'll be producing several billion pounds of nickel, in our feasibility study. So, you can have you can do the math there to come up with what the read-through potential value could look like. So.
Yeah, it will be very interesting. That's one of the reasons why I'm a shareholder. Because I was quite good in mathematics. Okay, let's come back from speculation to real facts. You were talking already about the integrated feasibility study per September. I think I want to emphasize again the carbon storage testing results were better than anticipated. And I think this is something where I have not seen with other projects so far. And what do you think could boost then the dollar value in the future? Let's say, as you said, 1 megaton is, let's say, 1 million tons per year. You could sell as climate certificates or CO2 certificates. So that would be a nice extra effect, which was not calculated yet, money-wise, right?
Yeah, so we actually capture carbon two ways. So one, as we process it, we'll pull some carbon out of the air. But the one thing that we've done differently is we've figured out how to basically inject CO2 as the material is going through the mill. And in less than a year, we'll be taking it, is when we discovered this process. And so, we'll be able to store CO2 that's been captured by other people to the tune of 1 million tons per annum. And so we would look to share whatever carbon credits, those people are earning, and or get paid fees to do it. So, we think between the passive and, what we're able to capture by storing other people's carbon, be in a position where we can be a zero carbon producer. So A, will generate a revenue stream from actually storing the carbon, and then B, because of all our nickel, cobalt, iron, and chrome will all be, zero carbon or low carbon, we'll be in a position, to be able to get, premiums for those materials, we believe, in 4 or 5 years when people, are keen to get low carbon versions, particularly in the nickel market, where so much production comes from NPI or ferronickel production, which has very, very large carbon footprints associated with it.
Okay. Can you just give us one short comment on the nickel market today, and where do you see it, let's say, in the next 1 or 2 years?
Yeah, so nickel, it's always had a big base in demand from stainless steel. You now have a big surge in demand coming from the electric vehicle market. Again, it's been you've seen some pretty significant destocking, restocking. I think by the end of this year, you're going to see, substantial, we're in a restocking cycle right now, and that's going to continue through and see some pretty strong demand growth by year end. And I think you're going to see, prices, start to move higher at the end of this year. And, again, I think nickel always tends to surprise on the upside when you start to get into a boom cycle. And we think, the same thing is going to happen here, to the middle part of this decade, and be very exciting time for investors.
Absolutely. How well are you protected from an unfriendly takeover?
Well, there's about a dozen of us who are involved in founding the company who control about 30 to 40% of the stock, so that'll help. Super. But you just I don't want to get that knock at the door at the wrong share price. So
exactly, that's what I wanted to say. At 135, 140, I think it would be stupid.
Yeah. Unfortunately, it would be very unfortunate if it went out that low. Yeah.
Yes. Exactly. So what is cash in the bank, meaning are you financed for this year?
Yeah, we're financed through till the end of the year with the money that we raised earlier in the year. So, and we're in discussions, for offtake partners, and as part of that, looking for them to fund, the bridge between the end of this year and to a construction decision in mid 2025. So, again, I've got most of my money in this company, so dilution is something we keep a keen eye on, and so hopefully we can get through without much dilution to current shareholders.
Okay, super. Mark, thank you very much for the update. That was fantastic. And honestly, I really have to congratulate you, what you and the team have achieved. And you guys are delivering. I love that.
Yep.
The only thing what is not so nice is the share price.
Yeah, no, we've got a great team, so I'm very fortunate to have a
Yeah.
great group of people to work with.
Yeah, definitely. Super. Thank you very much and hope to talk to you soon. And we all look forward to then September when we want to see what are the real numbers.
Yeah, no, me too. We'll see you then.
Super. Thank you. Yeah, ladies and gentlemen, that was Mark Selby, the CEO of CNC Canada Nickel Company. And yeah, I think it's one of the best nickel projects in the world, especially don't forget in Canada, in the heart here of the Timmins area. And this is fantastic with great neighbors, great infrastructure, and fantastic resource already. And please don't forget, by September comes the feasibility study, which will also incorporate then the CO2 storage, how can I say that, metrics. And I think we will be all very, very positively surprised. I'm a shareholder in the company. You should really think about Canada Nickel when you think about a nickel investment, because it is unbelievable cheap. And I'm pretty sure you will make a bunch of money. Thanks for watching us, and bye-bye from Switzerland.